economy, it's going to get more expensive.
The Federal Reserve raising a key interest rate.
Americans are now facing one of the toughest rental markets in years.
Prices are not going to come down.
Oh, no. But I've heard it now from three separate people this morning.
Your company has been raising rents, but you were just telling me before we came on the air, by about 30%.
My name is Chris Shoemaker, Shoemaker Mortgage Team, and this is your July 2022 market update. U.S. consumer prices rose to 9.1% through June, which is a new 40-year high. If you don't remember from school, I don't blame you, but the Federal Reserve, or what we call the Fed for short, is a government-backed central banking system. You can think of it simply as who banks get their money from, or the government's bank. The interest rate that we're talking about when the Fed hikes or raises rates is the interest rate at which banks get on the loans that they take. Banks take out these loans in order to issue more loans themselves to consumers, which are car loans, mortgages, credit cards, other financing. So last month, the Fed raised this rate by 0.75%, or in financial terms, 75 basis points. So that itself was the largest hike since 1994. Afterwards, the Fed Chair Jerome Powell told reporters that either a 50 or a 75 basis point increase was likely in July. A majority of colleagues since then have either echoed that line or endorsed an even bigger rate hike. And that was before the inflation numbers for June were released earlier this month. As our central bank, the Fed, continues to raise rates, other interest rates will also be affected, such as homeowners with adjustable rate mortgages. Since higher rates means higher mortgage payments, it may also reduce the purchase price maximum for home buyers. If you're a home buyer, you're a mortgage professional about how these interest rates affect you. If you don't have a mortgage professional, call us. The Fed is going to be meeting to decide this on July 26th and 27th. CNN Business and CBS News both specifically named key factors, though, that may be signaling that we might see some light at the end of the tunnel soon. First is core inflation. Annual core inflation, which strips out volatile food and energy prices, is up a lesser 5.9% over the last 12 months and has been slowing its pace. This is good. Second point, oil and gas prices. Concerns about whether the global economy could tip into a recession have dimmed, but they're still alive. One thing that is pointing us in the right direction are oil and gas prices. As these continue to go down, it is our lesser costs for consumers and overall is going to lower the inflation rate. And the US has seen marginal gas price decreases almost every day in July so far. So in inventory news, aka how many houses are actually for sale for you to buy, the Dallas Morning News noted that Dallas, Fort Worth, Irving, and Plano are some of the hardest places to live for folks on minimum wage. In fact, these four North Texas cities are among the least affordable places in the U.S. For any adults earning minimum wage. The study compared the average cost for a one-bedroom rental versus the city's minimum wage, and then calculated the hours of work needed to afford 1 month's rent. In Dallas, where the minimum wage is $7.25 an hour, a renter would need to work 160 hours to pay the nearly $1,200 average rent price for the area. And that's before accounting for taxes and insurance. And that $1,200 is only for a one-bedroom apartment. The study also says that over the past 5 years, Dallas has seen a nearly 80% increase in home value. Newswire reports very similar statistics for rent. The median price in June for a two-bedroom apartment in the U.S. was over $1,700, which is up almost 9% from a year earlier. Nonetheless, rents have slightly decreased since February, according to rental site Zumper. In fact, with the recent rise in mortgage rates and an increase in sale inventory, buyers are going to seem to be gaining leverage on sellers, and they already have, and that's really good for buyers. It's really good for renters who would like to become buyers, and it's good for overall home price stability. DFW's ABC Channel 8 took a different angle by comparing home value increases to household income increases. So home value increases versus income increases, right? They highlighted an across-the-board increase in both home values and rent prices. But they noticed that the average family income increased about 3% in 2021, whereas the average home price or home value increased by 19%. Dallas Morning News reported on this as well, saying that the average rent for DFW rentals rose a massive 17.5% from this time last year. In the Dallas area, rents average $1,526 per month, while Fort Worth area apartments cost $1,373 per month on average. People who moved into an apartment pay an average of 21% more than the person that moved out of it. In rate news, NationalMortgageProfessional.com published an article on what to look for with upcoming Fed decisions and rate hikes, emphasizing that in June, Federal Reserve stated that they would do what it takes to get inflation under control, even if that means slowing an economy that already appears to be on the brink of a recession. Members said the July meeting next week likely also will see another 50 or 75 basis point move on top of the 75 basis point move from June. And this was before the inflation numbers for June came out last week. As we noted earlier, that may now be a 100 basis point or 1% Fed hike. To recap what you probably know, mortgage rates have been rising. They've been rising since the second half of 2021 and may continue to increase through the remainder of this year. This is in part due to high levels of inflation and in part due to policy responses to rising prices. It's in part due to international relations. We saw a tiny bit of relief this month with a small retreat in rates. But unfortunately, Yahoo Money now reports that we're back to where we were, and that gain is over. They also noted that the volume of mortgage applications decreased for the second week in a row, down 1.7% from a week earlier. And this could be another good sign if you think about it right. As less buyers in the market make offers on houses, that means the buyers that stay in the market have a better shot of actually getting those houses. It means less bidding wars. It means less driving prices up. So this could be a good thing overall for those who do really need to buy a house. In other news, a Zillow analysis outlined DFW as one of the best places for singles to move. So if you're a single adult, Zillow says that DFW is one of the top 5 places in the country for you to move to. So all of my single buddies, as they say, God bless Texas. That's all. I hope this was helpful. Let me know what you agree with, what you disagree with, any comments, predictions, analysis. I want to hear it. So again, my name is Chris Shoemaker. Thank you for listening. Goodbye.